Ahead on Breakfast Briefing, Philip Chan from Shanghai International Securities gives us a wrap-up of the Hong Kong market this week, as well as an outlook for next week. Thai people will have to wait a while longer.
China has vowed to dismantle.
Malaysia doesn't have a history of research.
Booming here at the Karachi Stock Exchange.
Bumpy ride on the Hang Seng Index.
With the Bank of Japan.
The German and Malaysian governments
With the side effects of a booming economy.
primary concern for a country like Indonesia. But the political message is loud and clear.
Welcome back to Breakfast Briefing. The Hang Seng managed to recover from its lows before the end of Thursday's trade session, but generally Hong Kong's market did not expect the U.S. rate cut or a related Hong Kong cut. So let's take a look at the market with Philip Chan, Research Director at Shanghai International Securities. Good morning, Philip.
Good morning. Good morning.
Now, Philip, will the interest rate cuts across Europe overnight change Hong Kong's mind and think that maybe U.S. cuts might also happen?
Well, I think that that's been signaled already because if you looked at the futures premium last night, it was actually about 80 points. And so even though the market has been sort of trading in this fairly narrow range for some time, the premium on the futures has been there for almost as long as well. So some people think the market's going to go up next week.
What happens if the interest rate does not get cut next week?
I think that you're just going to see some, I don't think you're going to see very strong selling pressure, just some downside in the market. But I do think that you'll see the market push past the 10,000 mark at some stage before Christmas.
Before Christmas?
I think it's still possible.
That's coming up in a week, Philip. So you think next week is going to see a rally in Hong Kong?
Well, it's not a major rally because you know, we're only less than a couple of hundred points away.
What do you think is going to push the Hang Seng up?
Well, just you've just got the you know, coming up to the end of the year. There's some activity in the market, and I think, like I say, expectations that this interest rate cut is going to come. However, I think once, you know, obviously once if the cut actually happens, then you may see some initial euphoria shortly after that. But then I think in the new year early in the new year you'd probably see a little bit of profit taking.
Now, how do you think people should play the market, and what sectors should investors look into?
Well, I don't think that the scenario is really changed for next year. In fact, we're going to be seeing, for most of the HSI stocks, we're going to be seeing single-digit growth, maybe, you know, low double-digit growth, and so I think that very much what we've seen like this year. So I think that the sectors to look at are still the commercial and industrials. Particularly conglomerate stocks, which has been the favourites for the last couple of years, and yeah.
I'm afraid we'll have to wrap up there, Philip. Thanks so much for joining us today. That's Philip Chan, Research Director at Shanghai International Securities. Now let's take a closer look at Asia's markets action, starting in Japan. Share prices